Hey everybody, it's Friday, November 21st, 2025, and if you are here, congratulations, you made it through a very challenging week, well, a challenging few weeks in markets. And I was going to say that it does feel like we are getting closer to the end of the correction, but right before I went live, I saw that Jim Cramer tweeted this. So now it might be time to double down on those hedges. Thanks a lot, Jim. No, but all Jim Cramer jokes aside, today saw relatively muted price action, which I was a little bit surprised by because today we had a large options expiry. A lot of puts were in the money after the selling we saw on Thursday, and there would have been a natural incentive to drive prices higher to have those puts expire in a little bit less profit or to get them to the max pain point. And that did not happen. So, what's notable to me now are the levels that we rejected at. And we are still in a downtrend. We have volatility spiking over the last couple of weeks. We'll look at the VIX once we get into the charts. And we may well see another couple challenging days ahead that we do need to prepare for. And I was a little bit off base yesterday when I was saying that after the NVIDIA earnings call and the buying we saw, and then that intense sell pressure we saw come in on Thursday, that it was persistent AI fear. And I think that's part of it. Everybody's having to think about how to revalue these tech giants now that they have much higher CapEx expenses, and they're not yet seeing the profits from that. But I would suggest that the CEOs probably know a thing or two and have done some calculations and know how to get profitable down the line. We can talk about that a bit later in the video. But a lot of what we saw selling wise kind of fed on itself because I think there was some natural cautious profit taking at that key 6,800 level on the S&P 500. And then we had that employment data news, and the market got a bit fearful and selling perpetuated on itself. And with funds being leveraged up, there's a thing called mechanical deleveraging. And thank you to NJ in the community for bringing this to my attention this morning. So what happens is when the market starts selling off, leveraged institutions are actually forced to sell and cut their exposure because their models mandate it, not because they're necessarily making a directional bet on the market or they all of a sudden feel bearish on a particular sector. So many of these funds that are doing this, they have very leveraged portfolios, meaning that they're using borrowed money to amplify returns. And when the market begins to fall a little bit and then selling begins to accelerate, the leverage works against them. So their equity positions shrink while their borrowing stays the same, causing the effective leverage ratio to really spike. So this is the point where the risk model steps in, and when the volatility rises, the required risk exposure shrinks. The leverage ratio jumps because assets fall while the debt doesn't, and the models automatically sell equities to bring that leverage and volatility back within limits. And I don't know exactly how these systems work, but I have to imagine that they're weighing equities on a scale, and riskier assets that move by higher percentage points, which would be a lot of the AI stocks, tech, disruption assets, are probably some of the first to be sold off. So this can create a bit of a feedback loop where falling prices force more selling, the selling drives prices lower and triggers even more deleveraging, all driven by rules and not necessarily human decision making. So we have that in play. And with the VIX spiking and looking like it might go higher, I think we should be on the lookout for another couple of these events. But those headwinds aside, in terms of tailwinds, we still haven't really seen year-end buying, which is often called window dressing. So this is when fund managers strategically buy certain stocks near the end of the year because their compensation packages and performance reviews depend on how the portfolio looks on paper at year-end. I know it's silly, but this is the way the world works. So their bonuses, they lock in at year-end. So the managers want to buy the winners to tighten performance against their benchmarks. Now, they want to look like they owned the year's strongest stocks, even if they missed the move earlier. So if they missed getting in April, they want to be in those winning names. And how perfect that the prices are coming down now just in time for window dressing season. But anyway, I'll put my tinfoil hat aside right now. But this buying pressure, it lifts the top performers, especially during thin holiday liquidity. And the problem is for other stocks that underperformers get sold off because the managers also don't want to have to justify having these underperformers in their year-end reports. So that's why sometimes we see surprisingly strong market action in the final days of the year, but that cuts both ways. So I would just advise being careful. If you're taking a bet on an asset that's been beat up, into year-end might not be the time to start building those positions, and you're better off to maybe wait on some of those plays until January. So it's really just like the deleveraging, it's mechanically driven behavior that's tied to incentives and not necessarily fundamentals. But what I was saying about the AI thesis and all these worries, and we see all these analysts talking about, well, CapEx spend is this, and for X amount of spend, they're only generating this amount of revenue. And that's, I would suggest, very short-sighted and also a little silly. Do you think all these intelligent people at Google, at Microsoft, at Apple, at NVDA, all these other companies, I mean, even XAI, that they don't have a plan for the future and they don't see the roadmap for this investment in AI data centers and infrastructure? And I mean, just one example of that would be right now, a lot of these AI video models are for fun and they're not driving revenue. But that's going to be the future of content generation. That's going to be the future of advertising. All of these things are going to get absorbed into the tech companies. If you're thinking about Tesla and their Optimus robots that get trained off of video, well, they need first-person video. And if they have a video model that can view any other task or any other piece of video content shot from a third person point of view and can automatically generate that into the first person point of view, then all of a sudden they can train their fleet of robots on pretty much any task known to man. So anyway, that's just one very narrow example, but I'm sure they are planning 8 or 10 steps ahead of things that we might not even be thinking of yet for the use cases for these AI tools that they're developing. So that was a long intro today. Let's get into the charts. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, starting here on the S&P 500, and you can see after our selling Thursday, we had fairly muted overnight price action and really did nothing for the first little bit of the open today. And then we rallied up, and where we rejected was this previous resistance trend line, which is coming in at 6,680 roughly. Now, I thought we would be able to mount a little bit more strength and get back into this diagonal neckline from our head and shoulders pattern and perhaps reject from there. So I'm watching for that as a potential gap up over the weekend. But the fact that we rejected here and pulled back into the close was definitely a sign of weakness, and we maintain this downtrend just of lower highs and lower lows the whole way down. And I guess you could argue that the one maybe little strong thing is we had this downtrend that we broke out from on Thursday only to reject back below it, and now we're back above that. But once we've breached a trend line like that a few times, I don't really put much weight in it anymore. What I would put more weight in is this diagonal overhead resistance on the 4-hour RSI. We've touched it 3 times now, and the 4th time can often lead to a breakout. So I am watching that on the 4-hour. But if we go over to the daily, the thing we're seeing on the daily, we broke this daily RSI support and we back tested it from the underside. And this, when the S&P 500, if you were not here for yesterday's video, when we maintain an uptrend, we generally bounce from this point. And then whenever we drop below it, that usually corresponds to a little bit bigger correction when we break below that point on the S&P 500 RSI. Don't have a pink box around the April tariff correction, but if we reject from this, I'm assuming this is going to reset all the way down below 30. So we've got a little bit more time to go there potentially for a correction. And we are on the 20 weekly, that pink line, but these corrections can often dip underneath. Sometimes we find support right on it, but if it's a more severe correction, we will dip underneath it. Okay, if we are looking at the NASDAQ bounced as well and didn't even make it as high. The equivalent for the NASDAQ, that rejection point, would have been at 24,760, and we only made it up to about 24,600, and we had that same old downtrend that played a bit of resistance for us. Again, I don't trust those very much after trend line is broken, but we also saw that weakness step in here on the NASDAQ, and we closed kind of right on the neckline from the complex head and shoulders pattern. We have an overhead trend line on the 4-hour RSI as well, but we only have 2 touch points, so I don't really factor that one in as much as I do the one on the NASDAQ. And then on the daily, this RSI support at 45, that's that equivalent point to the RSI daily support on the S&P 500. And same thing, anytime we dip below this, we normally have a bit more severe correction that usually dips below the 20 weekly. So that's what we are seeing right now. And we are a little bit below the 20 weekly, and our head and shoulders price target is still down here at 22,300. So watch out for this next week. We're not quite at the point of being reset, and mean reversion hasn't deviated to the lower end there either. All right, and we need to look at SMH as well, which this was a key one that I was watching today. And we have our breakdown neckline here on SMH. This horizontal level at, sorry, my magnet tool is on. That horizontal level at 329. I've been seeing that number all over. Do you guys ever just like see a number over and over again? I actually Googled it, and 329 is a number for change. So maybe that means the markets are changing, but no, I've been seeing it for months. Anyway, we got up to this level. We breached it a little bit, but for all intents and purposes, couldn't really get a 4-hour candle to close anywhere above that. So I'm still watching this for potential further rejection, and the head and shoulders pattern on this is pointing down to a target of around just under 300, 297. So we're watching that on SMH, and I actually got in some SOXS at the close just to hedge a little bit in case we drop this on Monday. I would have assumed we might have gone a little bit higher. Now that we're in the lower band of the confluence model, I would have assumed we could have maybe gotten up to 338 or so before rejecting, but the fact that we couldn't bounce higher just shows you the weakness in markets right now. Okay, and moving over to NVIDIA, where we are still kind of holding our horizontal support, but we did close our daily candle below it and a couple 4-hour candles below it. So this has now been breached, and we had these wicks down all the way to 172 today. We tried to rally up back into this downtrending resistance and wicked through it slightly, but for all intents and purposes, they're still rejecting from that point. So this just opens us up to further downside on NVIDIA. And if we are measuring this as that descending triangle that we were doing before, we can just put this on here and see where that would get us. That would get us to about 146. Let's go out to the daily, see what's happening on the daily. And does 146 make sense? Actually, that's right where the next VRVP cluster comes in, and it's where we had this horizontal consolidation. So it makes a lot of sense for where we would see support, and the daily has a fair bit to go to reset there. Okay, moving on to Tesla, because I forgot to cover this yesterday. My apologies there. But on Tesla, we have a downtrend on the 4-hour RSI with 3 touch points. So this has been validated. So a break of this 4-hour RSI downtrend would be a good early sign of recovery. And Tesla was looking to me from a price structure standpoint like it was trying to recover and form a base in terms of this low, then a higher high, higher low, higher high. Now we dropped and made a lower low again. So we're in a bit of an uncertain trend. We might jump up again, and perhaps we reject from the Confluence Mile Center Cloud. And if we make a lower high, then this downtrend could continue. So downtrend to uncertain trend. But compared to some other assets, Tesla has held up better the last few days. We still have the downside price target of at least that 370. And some of these targets from the double top would actually be suggesting, depending if you measure it on the daily and you don't see this wick down, they would be suggesting 350. But if you're measuring it on the 4-hour, the double top target would suggest 325, which is in the middle of this consolidation range that we were in from May all the way through September of this year, where Tesla was doing a whole lot of nothing. I mean, it was tightening up. It was good range trading. And my trading view is jumping all over the place. So that's it for Tesla. Let's go over to the daily real quick. And the daily, we broke down from this daily RSI uptrend. And I talked about that. What was that? Early in November when that happened. Also got out of my coin position when that happened. So watch these RSI trends. They are very powerful indicators. And now we're either going to reset all the way down to 30, but when Tesla maintains an uptrend, it often bounces from this 35 level on the daily. So that April tariff correction, obviously we dropped below 35 right there because that was an extreme drop. But if we go back in time, as we maintained this uptrend, the last time we got down there was that April 24 correction. I can't even remember what happened in April of 24, but the yen carry trade low, we didn't even break below this. We bounced off of 36 actually. And then we got back down there on this earnings island reversal, just barely touched it. So look out for this to play support. And because nothing major has happened for Tesla, unless in the macro we have some kind of big event that causes a market-wide flush that could get us down here, I would be looking for a bounce point around 35 on the daily RSI for Tesla. All right, I was going to go to Bitcoin, but let's just touch on MicroStrategy really quickly. So we broke down from this 183, 185 support. We're back into the middle of this zone. I was saying yesterday that I was thinking we wouldn't get support till the middle of the range at about 150, but because we have this whole big volume cluster, and I'm just going off some of these peaks and troughs right here. But let's draw a quick range-based volume profile here just to see what we have going on in this range. And actually the point of control is right where we are right now at 165 where we bounced today. So that's interesting to see that range-based volume node there. And let's just bring that up so you all can see it. So that 165 level, and then right down here is the next little spike at 131, which we can see very well right there on just the traditional VRVP. So areas to watch on MicroStrategy. This is obviously still dropping like a stone, but just like a blow off top in reverse, this is not going to go forever. And we're getting very extreme on the reads here. So there is going to be an opposing reaction eventually. And let's just go to the weekly real quick. Yeah, we're getting reset on the weekly. It's crazy how oversold Bitcoin is and this too. So MicroStrategy, when we rejected on this weekly uptrend on the RSI, broke down, rejected from underneath, that's where I got out of a good chunk of my position, which was way up here, and we were rejecting from that key $360 level. Then I sold the rest of my position when we were breaking down from this trend line, and then I had like maybe 4% left that I sold when we broke down from this trend line here, because I was just holding it to see if we would get a bounce. But these kinds of early indicators can really be helpful. Okay, Bitcoin unfortunately failed our next underside support, which has been support since October of 23. So we have two trend lines broken now, and we have been fighting on the 4-hour to close back above this. And honestly, there's not much support really coming in till that 74K level. We can do the same thing again, just with a fixed range volume profile to see if that tells us anything from this trading range right here. And it's kind of right where that's where we're bumping into resistance now. We're bumping into resistance at that 84.6. So I wish I could say Bitcoin was looking strong. The only things that are working in its favor is how oversold the RSI is and how deviated we are to the downside on mean reversion. Now we can move this down to negative 1.62. The last time we had mean reversion that low was during the COVID drop, if you can believe it. It's unbelievable. So just the speed of this selling has gotten us to reads that we haven't seen there, or since this 50% price drop during the bear market of 2018. Sorry, I can't read. So Bitcoin has a lot of proving to do. I think we just need to see if we can get a little rebound over the weekend, reclaim some of these levels. But if the market keeps selling off, I don't see a reason we wouldn't be heading down to 74K by next week. And I guess the only hopeful signs are that, there is some whale accumulation happening in the background. But in terms of mechanical deleveraging and risk assets going first, if these big funds have exposure to IBIT, they see Bitcoin's dropping. This is going to be one of the assets they sell earliest. So, this is behaving in different ways now. We've learned to trust traditional 4-year cycles and buying in a traditional sense without institutions. And this is a new game now. And I think we just need some time to figure out, what does this new environment look like and what can we expect for the price action to do moving forward. And we really don't have a good framework for that yet. And this is one of the first big stress tests that we're getting with institutional selling. So we will learn a lot over the next few months and years, but it's going to take time. Okay, looking at Solana, it unfortunately broke down from this weekly uptrend and we wicked below it, bounced back above, and we're kind of right on it right now at that 126. The only good things I can say on the daily is that this RSI downtrend doesn't have much more room to compress and will probably break soon, which is usually the start of a turnaround. Mean reversion has deviated to the downside. So, this too shall pass and the trend will turn again. But if we look on the weekly, you can see how we failed at the confluence model cloud. And we're also holding this weekly RSI support at 36. So seeing a bounce from here would be good. But if we break below it, really, we're just like Bitcoin. We're at much higher prices with extremely oversold reads. And we haven't been below this since the 22 bear market, June of 22. And then we dipped a little bit lower during FTX in November. But really, Solana was at $30 last time we got this read and at $8 when we bottomed. So I would imagine that even if we drop below this, we're really close to the end of a correction on the weekly, which could set this up for more upside. And I know this is speculation. People are going to say, no, the 4-year cycle is alive and we have to expect 365 days of bearish price action. And that could happen. But I'm just saying, looking at, just the indicators that we have to work with, this looks much closer to the reset point than it was in 2022 during that bear market where we still had time to go. I mean, granted, this built a base for a long time. But anyway, let's see how this plays out over time. Worried about this wicking below because that normally foreshadows more of a breakdown, but time will tell. Okay, Ethereum broke down from its 50% support too. Honestly, not much to say here outside of the fact that I'm expecting this to probably correct down to at least $2,500 and see if it can maybe find support there. We're oversold on the daily, and let's see if we can learn anything from the weekly. We're into weekly RSI support for Ethereum, so we're getting close. And since we looked at the weekly timeframes for Solana and Ethereum, let's just do that for Bitcoin as well. And we are coming in soon to tag the 30 on the weekly RSI, probably if we maintain this pace in the next week or two. And the last time we hit that was the June low of the 22 bear market. The time before that, we almost tagged it, was during COVID. We didn't quite get there. And then the bottom of the 2017 bear market. But look how beat up the price action was in each of those instances compared to where we are now. So structurally, I don't know how you can make an argument to say that things aren't different. Yes, we're off 40K from the highs, but look at the structure and where the reads are in comparison to where the structure was at those past lows. And we have a very different situation right now. Okay, I'm just going to go through a bit of a rapid fire round, but Coinbase broke down from its next support. We're oversold on the RSI and mean reversion. We haven't gotten a dot yet, but we have this gap fill right here, and we broke down from this local range support. We did close a little bit higher, but I think we are probably going to come down to close this gap. And I would love to see support coming in just above 200, like 210 for Coinbase, to keep it in a stronger position for a bounce. So we're getting close, but probably still a little bit more downside. If we go over to Hood, in contrast, which I just held off on a little bit, because we're into Confluence Model Center Cloud support, but we broke this daily RSI uptrend and bounced a little today, but I think this is going to reset. So I'm looking for an entry somewhere around that low to mid $90 range. We got as low as 102 today. So I think we're getting close to a turnaround point for Hood. And honestly, if it could maintain above 95 and this previous swing low, that would set it up just from a structural perspective to be in a slightly stronger position, and it would probably recover a bit more quickly from there. So it's getting close. If this is a long-term hold for you that you want to be in, I would say this is definitely, a decent area to start considering it. They have been beating on earnings. Their subscribers are through the roof. They're adding new services. So all the fundamentals are there. And, just set those stops tight if you're worried about the market. You have the Confluence Model Center Cloud here for support. If you get into a position, just set a stop limit order right below that to mitigate your downside risk, and then you can get in potentially at lower prices. Okay, we haven't looked at Celsius in a while, but we're getting close to the price target, so I just want to mention it. We already have a bullish divergence on the 4-hour, and our price target from the double top pattern is down here at $33. We closed the week in the high $30 range, and if we go out to the daily, you can see that support aligns with this consolidation zone. So this is getting to a point where, it might start making sense to slowly start deploying into your position if you do want to be in this one. And just to flip over to Decker's, one that has been really beat up, while the market's been weak. So this is notable. This has been beat up, and we got in a position here, added to our position. I'm actually close to even on my calls because I got calls in this range and just below $80. So I need to get to 88, a little bit higher, but we're working our way there. But this has been recovering while other assets have been selling off. So that strength should be considered. We've been making higher lows the whole way, and we might reject here from the Confluence Model Center Cloud at 90 and take another swing lower. But, keep your eye on this one. Okay, from the price action, Palantir was trying to hold on. It wicked below the 618 level, and the Confluence Model Center Cloud bounced back above. But our RSI support has failed, and this looks like it's going to correct a little bit more. I wouldn't be surprised to see us hit the 50% level in the 200-day moving average at around 140. And then it will probably take a bit to find its base before getting a bounce on. And a lot of these assets, we're going to look at a lot of names that have had more severe sell-offs than this. And whenever that happens, don't expect a quick rebound like that. When you get an aggressive sell-off after a massive move, just expect some chop, and that assets need to find their footing. If you remember what Bitcoin looked like in its bear market last time, it had that double top bear market and formed a really long base and almost, got people out of the market just because it was doing nothing for so long before it started to rally again. So I'm not saying it's going to take that long for Palantir. I'm just saying don't expect an immediate bounce back up to all-time highs. What we saw in April is a bit unprecedented and does not happen often in markets. Okay, just to revisit it because we haven't been talking about it for a while, but Unity software is still doing good. Through all this sell-off, it's just been holding its own. And we had that pump on earnings, and I didn't get out because this is a long-term position for me, even though that jumped from 35 all the way up to almost 44. But I said, just looking at how this has been in the uptrend, and you can check the tapes from a few weeks ago, that this probably wasn't going to head straight back up, that it's going to spend some time consolidating, and it's doing just that, which actually sets it up for a stronger move in the future. So now it's just in this tightening range, and it'll probably do that a little bit longer until it has a directional break. And let's just go to the 4-hour, because on the 4-hour, we can sharpen this up a little bit post earnings, and we can begin to see where our overhead resistance is. So we've got 3 touch points right there, and our underside support. This might actually make a decision sooner rather than later. We've only got 2 touch points on the bottom end of the range, but we do have a clear symmetrical triangle forming there that we can watch to see how this is going to break. And just make that a little bit bigger. So let's say by the 1st of December, we should have a decision on this, probably next week, honestly, before the Thanksgiving holiday. Okay, MU, I should have covered this with the semiconductors, but mean reversion very deviated to the lower end of the range at negative 2.8. Touched the bottom of the RSI band, got a little bit of a bounce on today, but we're now into the Confluence Model Center Cloud, and this pesky magnet is on, which means we could see more downside. And I think after this massive run up, even though I do believe in MU and their orders are strong and their RAM is in a lot of demand, we just have to pay attention to that weakness and these trends breaking. So let's look at the daily. And yeah, we also rejected from the Confluence Model Center band on the daily. So I would say don't rush into this yet. Give the daily a bit more time to reset. And in terms of areas where we can find support, this last zone of consolidation here, which was between 157 to 170, that's the first area where I would look for support. And then if we drop below that, we have a couple gap fills down here around 140 to watch out for. And let me just see, my VRVP is turned off. In terms of the VRVP, we're so far above any previous price action. Right where we bounced today, we have a little bit of a cluster here at 191, but that main support really is at the bottom of this range at 157, and then below that, gosh, 130 even really. That 140 spike isn't huge. So anyway, just give this a bit more time. I think getting out of the way of this on a lot of these and just letting the dust settle is going to be a good strategy. Same for SanDisk here. Confluence Model daily band maybe for a little bit of a bounce, but we have a big gap in the VRVP all the way to 147 and then to 130. And if we go to the 4 hour, yeah, we didn't get to the bottom of the range yet. Mean reversion is probably deviated to the downside. So we might get just a little bit of a pity bounce here in terms of this, but then it might consolidate more and hopefully it holds there. That would be the best sign of strength, but more likely it might correct a little bit more if some of this risk-off sentiment persists. And if we just measure top to bottom just to see where we could expect some fib support, we wicked below the 618 and the 50%. Makes a decent amount of sense at 163. So yeah, just be careful with these, at least right now, to not get in too quickly. Western Digital got to the 4 hour center band and bounced a little bit. Mean reversion, RSI are pretty much the bottom of the range. And on the daily, we're back into this previous consolidation range at 135. So it makes a decent amount of sense, but it still seems like on the daily, this has more room to correct. Okay, ending with some of the big players as we have been in all these videos. So Google closed above this breakout zone. Actually, it didn't close the daily, but in after hours is above this breakout zone. So it's looking strong. On the daily, we still have that bearish divergence in play. We closed right at the breakout zone on the daily. So that's something to watch out for, but these things can run longer than you expect. AMZN, Amazon. And Amazon bounced right from the 200-day moving average. I've been building my position around that 220 and just under level. And I haven't deployed all my position because, right now we're holding this swing low. We've been bouncing from this RSI point here on the daily, but there is a chance this could correct more. And if it does, then we're looking to that psychological $200 level. And then really this gap fill just below, which is at about 193. And I would add to my position progressively. And these are out to January 2027. So a move down isn't going to impact these as negatively from a price perspective because the options have so much time in them. MSFT, and we'll look at this on the 4 hour so we can see the after hours price action. This also, as a short, has been doing really well for us. And we're not to the price target yet, but it bounced from the 200-day moving average. And this could, rally quite a bit and still be in a downtrend. We could reject off this previous consolidation range. We could go all the way up to 490 or so and continue this downtrend. So I'm still looking for that target to get hit, but I know it probably won't get there in a straight line, and that target would be at about $430 here for Microsoft. And on the daily, you can see that swift breakdown as well. And we're getting, below 30 on the daily. So perhaps it does find some support here for a bit to let things cool off before getting to that price target. And VRVP wise, there's not a whole lot of support for it. And Meta, just to pull this one up. All right, Meta, obviously very oversold after that earnings reaction. We're into our price target. There's a chance it could drop lower. We're watching this gap fill right here at that psychological even $550 level. So we've got that horizontal line drawn there. And on the 4 hour, let's see. Oh, we were just testing the 4 hour center band. So we do have a bullish divergence on the 4 hour where we're still maintaining this uptrend. And our trend line is right there on the 4 hour. It doesn't register properly with the difference between extended trading hours where I have this drawn and then moving that over to the regular trading hours. Anyway, Meta's close. There's a chance, obviously, it could go down to that 550, but it feels like a pretty good bet right now. Obviously, Amazon and Google are the leaders, and position size-wise, dedicating more to those. But Meta is good, I think, for a bounce play. And in terms of where it is compared to its April lows, we're only how much above that now? That's April 21st. Let's go off the April 7th low to the lows here. 26% above that right now, where other companies are over 100% above that. So hasn't moved that much. Okay, so that is it for the charts. Really, the main thing I can say is watch the open on Sunday night. Do we gap up past some of those resistance levels that plagued us today? If not, I would be cautious moving into Monday. And really, the bulls still have to prove it to us. We maintain the current downtrend structure that we're in. We haven't broken any previous swing highs on the major indices. So really, next week, and actually the last few days, the indices have been my guide. Yes, there's a lot happening in some individual names, but right now for the broader market to turn, I'm watching for the structure of the indices to flip positive, to be that leading indicator that it is on that aggregated scale of everyone that's included in the indices, safe to go back into long positions. And we have not seen that yet. So watch the overnight open on Sunday. Watch it for crypto as well with those key levels breaking down. And I will see you guys on Monday for the next video. And I hope you all have a good weekend. Bye for now.